Well, if we take a look at the charts here, we've got the chart of the SP 500. So I believe we're coming into a fairly major market topping scenario. In fact, when we look at the big picture and look under the hood of the markets, what we're seeing right now in the overall stock market over the last few months have been weakening. Kind of different commodities and assets have been performing better than the stock market. People are nervous. We've seen gold hit 100% measured move based on a long-term chart you and I have talked about before when we look at the monthly chart. And gold since then has pulled back with some big selling. I think GLD, the gold ETF, had some of the biggest monthly outflows, huge outflows, I think, in December over the past 2 months. So definitely, I think there's a lot of things coming together. When we look at the big macro picture, I think the economy is slowly coming to a grind. It's slowing, it's easing. Hasn't fully stalled out yet, but I think that's coming. And what we're seeing in the stock market right now in terms of the last several months, from a chart standpoint and also kind of economic data, is kind of things are slowing down, similar to what we saw just before the 2022 bear market phase. So that coupled with gold hitting its 100% measured move now, energy stocks have been dramatically outperforming, especially compared to the price of oil, which has been going down. Energy stocks have been going up, but now we've seen energy really come to a grinding halt. Stocks have fallen hard. Dividend stocks are selling off. When dividend stocks are really selling off, that's like mass psychology. That is most retirees and investors who hold most of those big stocks, those companies, they're starting to unload those portfolios. And so there's a lot of things coming together that are just saying, hey, this market is coming to a grinding halt. And I think we just need to let January play out. To me, it's like, let's see what January does. Trump's going to be in now, and that's going to create a big bunch of volatility, probably a big pop and a drop and all that stuff. But with gold hitting its 100% measured move, the stock market also hitting. So let's take a look at this quick, Elijah, because this is a really good visual of where the stock market lies. And the SP 500 has done the same as gold. So if we were to just take a look at the SP 500 monthly chart, we have the COVID low, and then we have the high from the top of the 2022 bear market. And then we go to this low. If we carry that forward, now this is a Fibonacci extension, and this is like the most powerful tool. I'm actually going to be doing a video on this on my YouTube channel. Based on the move up and the strength of the pullback, it tells us where the next two upside targets are. If we come up to this 618, which you and I have talked about before, Elijah, usually we see a pause. And if we have a pause there, we almost always go up and hit the 100% measured move. The stock market has now done that. If we flip over to the chart of gold, gold has done the exact same thing. If we go back to the beginning of the last major super cycle and draw Fibonacci on the monthly chart, we have the same thing. We have the high in 2011, the low in 2015. We carry that forward. Gold has hit the 618. It had a multi-year pause, very similar to what it had over here. It was a multi-year pause. And then it's taken off and outperformed the markets and hit that 100% measured move, just like it did just before the 2008 financial crisis. Gold is the global barometer telling us the world is nervous. They're getting out of stocks, real estate, other currencies and things like that. And they're moving into a physical asset kind of outside of the financial system. So those are kind of the reasons why I think we're starting to see things really top out and why most of the upside is done. The market could go a little bit higher, but I don't see it as like a new investment signal and something with a lot of power behind it. It'll just be a small rally, I think, to get people maybe excited about higher pricing, and the institutions will sell into this. And we've seen lots of institutional selling into the buying, and they're unloading their portfolios to the general public who are very bullish right now, which we've seen all the ARK ETFs and all the small caps and micro cap stocks starting to come to life. So people are piling into the most volatile stuff right at a market high. That's another sign we need to be aware of. I think it comes down to just overall money flow. When things start to sell and fall, people have margin calls. When people get nervous, they start to sell stuff if they're going down. And really, it's just kind of the market starts to fall and people start to sell. And the more it falls, the more people get nervous, the more people sell positions. It could buck the trend, but the market always feels like every time the stock market puts in a major bear market, that, precious metals should take off. The ultimate story for precious metals is always there. The problem is when there is mass selling globally and people have to liquidate and they're struggling financially and they need to sell investments for living or for keeping their business going, investments go down. Almost everything kind of gets pulled down. So I don't really think it'll buck the trend. And I think Bitcoin will probably be the same. I think people will eventually, gold, I believe, is a currency, a type of currency. Bitcoin is a type of currency. I think they could move up for maybe a month or two and maybe hold up in value while the stock market struggles. But I think once we get into the bear market and the stock market really sells off, I think we'll see gold and silver, as you and I have talked about before, pull back for several months. Probably Bitcoin as well. And then they'll reset and then they'll have a new opportunity. They will have the ultimate opportunity, kind of just like after the last bear market. Once the forced liquidation and fear dissipates, then they're going to take off and be the leaders as a safe haven type of play. It's possible. It could be, a 20% pullback in gold and bring us back down to this level fairly easily, I think. I know people don't want to hear that, but it would probably be a fairly quick, swift drop and then have a knee-jerk reaction bounce and the start of a new rally. It's kind of what happened back over here. It's hard to see, but there was one super strong month that went straight down and crashed. And then the next month was a knee-jerk reaction and then it took off. So it'll most likely be something like that is my expectations. But yeah, there's quite a bit of potential here. Gold may hold its ground fairly well. It might actually just trade sideways and it could hold up very well and create a bull flag pattern, which is you have a rally and then you have this bull flag and then the second half of the move takes off, to 3,500 or so from here. So all I'm saying is gold. I think the main move in gold and stocks are done. The monthly charts have said, hey, we've hit our measured move. It's time for at least a pause, if not a major pullback. And so people just need to be aware that, hey, weakness is not a bad thing. It's just, you have to understand it's probably going to happen. And it's an opportunity to the downside. It's an opportunity to rebuy later at a better price. So it should be seen as a positive thing if you can understand how to view it and trade it. Yeah, I would probably expect silver to probably fall somewhere back down into this consolidation. There could be a couple support trend lines. So it could fall back down to 23, 22, somewhere in that range, 24. That's going to be a pretty critical level. I think somewhere in that 22 to 24 range. So it would pull back. I'd like to think it's not going to break down through this, but the market, when there's panic selling, silver is very volatile. We kind of had the same over here. We had lows over here in the 2008 bear market. It crashed and pierced right through it and then, spooked the market and then it took off. So it could very easily pull back much deeper. Silver pulled back over 60% last time. It could pierce down and drop down to the 2018 mark and then, have some crazy reversal to the upside. It's going to want to probably shake out this low or this low over here, trigger those stops and make everybody get out. And then, of course, it'll go the opposite direction once most people spook.
As for Bitcoin, we've been hitting all-time highs recently, and it broke above the $100,000 mark. Now we've pulled back. What is your outlook for Bitcoin going forward?
Yeah, so Bitcoin was a trade we actually did about a month and a half ago, and it was simply because we had a really nice setup. We have this giant cup and handle pattern, also a giant bull flag pattern. And if you were to do the same, this is the monthly chart. If we were to do the same that we did with gold and the SP 500, you take the low, you take this high, and then you come over here and you take this low. It draws those targets where I expected Bitcoin. We ended up getting long Bitcoin right over here. We hit our first target at 618, which it actually paused there for about a week. This is a monthly chart, so you can't see it. And then we ran all the way up. We hit our second target at 107,000. And so it has now hit that 100% measured move. So now I believe, based on this 100% measured move, I think it's going to continue to chop around, trade sideways, or pull back deeper and kind of reset. So that's why I was saying in my video, I'm like, looks like the stock market, gold, and Bitcoin, they have all hit 100% measured move on the monthly charts. And it feels like a feeding frenzy. In Bitcoin, it was headline news, everybody talking 100K, everybody's buying it. Same with gold. Everybody was bullish when it topped out, right when it hit our targets. And everybody's bullish on the stock market again here. We have people calling for 7,000, 8,000 SP 500, which is way up there, but technically it's hit its move and it needs a pause, I think, before it goes any higher, if it is to go higher.
Chris Vermeulen presents a confluence of market signals pointing to a significant market top forming. This technical analyst observes that beneath the surface, markets have been showing signs of weakness over recent months, with various warning signs emerging across different asset classes. The story becomes particularly interesting when looking at gold and the S&P 500, which have both hit critical technical levels, specifically their 100% measured moves. Adding weight to the cautionary tale, there's been notable selling in dividend stocks, which typically signals broader investor anxiety since these stocks are favored by retirees and conservative investors. Energy stocks, despite their recent outperformance against falling oil prices, have suddenly hit a wall. Meanwhile, the analyst notes concerning behavior in retail investors, who are piling into volatile microcap stocks at what could be a market peak, a classic sign of late-cycle market behavior. Looking ahead, the analyst suggests that while precious metals and Bitcoin might hold up or even rally briefly, they're likely to face downward pressure in a broader market sell-off. This view stems from historical patterns where even safe haven assets initially decline during periods of forced liquidation and financial stress, before eventually finding their footing and leading the recovery. The key message emerges as one of caution. While markets might see some additional upside, the major moves appear to be exhausted across multiple asset classes. Rather than viewing potential weakness as purely negative, the analyst suggests seeing it as an opportunity to potentially rebuy at more attractive levels later. What's particularly compelling about this analysis is how it weaves together technical patterns across different markets, from stocks to gold to Bitcoin, all suggesting similar conclusions about market positioning and potential risks ahead.